Question 1. Which of the following is true regarding health savings accounts? HSAS under the Affordable Care Act. Account A. Contributions to an HSA are tax exempt, but the withdrawals are subject to income tax if used for non-medical expenses. B. HSAS are only available to individuals who are enrolled in Medicare. C. Withdrawals from an HSA can be used for any purpose without penalty. D. Contributions to an HSA are tax deductible and withdrawals used for qualified medical expenses are tax-free. Answer D. Contributions to an HSA are tax deductible and withdrawals used for qualified medical expenses are tax-free. Explanation. Health savings accounts, HSAS, are designed to help individuals save for medical expenses with tax advantages. Contributions to an HSA are tax deductible, which reduces the individual's taxable income. Withdrawals from the HSA used for qualified medical expenses are tax-free. However, if the funds are withdrawn for non-medical purposes before the age of 65, they are subject to income tax and a penalty. The key factor in the account regulations surrounding HSAS is that the funds must be used for qualified medical expenses to maintain their tax-free status. Question 2. Mr. Stevens, a policyholder, has just received a claim denial from his insurer for a medical procedure he believes should have been covered. What should Mr. Stevens do next? A. Wait for the insurer to automatically approve the claim after a set period of time. B. File an appeal, with the insurer providing any additional supporting documentation. C. Contact the New Mexico Insurance Division to report the denial immediately. D. Accept the denial, as insurance companies have the final say in claim decisions. Answer. B. File an appeal, with the insurer providing any additional supporting documentation. Explanation. According to New Mexico healthcare insurance regulations, policyholders have the right to appeal claim denials. Mr. Stevens should file an appeal with his insurance company, providing any necessary additional documentation that might help clarify the medical necessity of the procedure. The insurance company is required to review the appeal, and if the claim is still denied, the policyholder can further escalate the issue through formal grievance procedures. It's essential to understand that insurers are obligated to review all claims and provide clear justifications for denials. Question 3. Which of the following is true regarding the Medicaid program in New Mexico? A. Medicaid eligibility is determined based solely on the applicant's age. B. Medicaid in New Mexico provides coverage for individuals with incomes up to 400% of the federal poverty level. C. Medicaid eligibility in New Mexico is based on income, family size, and other factors like pregnancy, disability, or age. D. Medicaid benefits are the same across all states, with no variations in coverage between states. Answer. C. Medicaid eligibility in New Mexico is based on income, family size, and other factors like pregnancy, disability, or age. Explanation. In New Mexico, Medicaid eligibility is not determined solely by age, but by a combination of factors including income, family size, and specific conditions such as pregnancy or disability. The state's Medicaid program follows the guidelines set by the federal government, but also includes provisions specific to the state's demographics and needs. For instance, eligibility for Medicaid is designed to assist low-income individuals and families, with particular provisions for vulnerable populations like pregnant women, children, the elderly, and those with disabilities. The income thresholds vary depending on the applicant's circumstances and household size. Question 4. Which of the following is a key distinction between EPO, Preferred Provider Organization, and HMO, Health Maintenance Organization, health plans? A. PPO plans typically require referrals from primary care physicians to see specialists, while HMO plans do not. But PPO plans allow policyholders to see any healthcare provider without a referral, while HMO plans require a referral from a primary care physician for specialist visits. C. PPO plans generally have a low monthly premium compared to HMO plans. D. EPO plans limit the number of specialists available to policyholders, while HMO plans offer a wider selection of specialists. Answer. B. PPO plans allow policyholders to see any healthcare provider without a referral, while HMO plans require referral from a primary care physician for specialist visits. Explanation. The key distinction between PPO and HMO plans lies in the flexibility of provider access. PPO plans offer greater flexibility by allowing policyholders to visit any healthcare provider without the need for a referral, including specialists, both inside and outside the network. However, out-of-network care typically comes with higher costs. In contrast, HMO plans require policyholders to choose a primary care physician PCP, and referrals from the PCP are necessary for specialist visits. While PPO plans often have higher monthly premiums than HMOS, they provide broader options for care and fewer restrictions. Question 5. Which of the following is true regarding the coordination of benefits (COB) in health insurance? A. COB ensures that the total benefits paid by all insurers do not exceed the total cost of the services received. B. The primary insurer always covers the full cost of the medical services before any secondary insurers contribute. C. COB is only applicable to individuals with individual health plans and does not apply to those with group coverage. D. If two insurers are involved, the secondary insurer is required to pay the full amount of any remaining balance after the primary insurer has paid. Answer A. COB ensures that the total benefits paid by all insurers do not exceed the total cost of the services received. Explanation: coordination of benefits (COB) refers to the process used when a policyholder is covered by multiple health insurance plans, e.g., through their own employer and a spouse's employer. The COB rule ensures that the combined benefits paid by all insurers do not exceed the total cost of medical services. Typically, one insurer is designated as the primary insurer and it pays first, while the secondary insurer may cover additional costs subject to policy limits and other rules. The COB process prevents overpayment and ensures fair distribution of benefits among the insurers. Question 6. Mr. Garcia has a health savings account, HSA, and is seeking to use the funds for an elective cosmetic surgery procedure. What should Mr. Garcia be aware of regarding the use of HSA funds for this purpose? A. HSA funds can be used for any medical procedure, including elective cosmetic surgery, without any penalty. B. Elective cosmetic surgery is eligible for payment using HSA funds without tax consequences as long as the procedure is done by an in-network provider. C. The use of HSA funds for elective cosmetic surgery will result in both income tax and a penalty for non-medical use. D. HSA funds can only be used for elective surgeries that are deemed medically necessary by a physician. Answer: C. The use of HSA funds for elective cosmetic surgery will result in both income tax and a penalty for non-medical use. Explanation: health savings accounts, HSAs, are designed to provide tax advantages for medical expenses. However, funds withdrawn from an HSA for non-medical purposes, including elective cosmetic surgery, are subject to income tax and a 20% penalty if the individual is under the age of 65. For HSA withdrawals to remain tax-free, the funds must be used for qualified medical expenses, which exclude cosmetic procedures unless they are medically necessary, e.g., surgery to correct a functional issue. Therefore, using HSA funds for elective cosmetic surgery will result in tax and penalty consequences. Question 7. What is the primary purpose of the New Mexico Insurance Division in regulating healthcare insurance? A. To provide direct healthcare services to insured individuals. B. To oversee the operations and ensure compliance of health insurance providers with state laws and regulations. C. To approve medical procedures covered by insurance policies. D. To set health insurance premiums for all insurance companies in New Mexico. Answer: B. To oversee the operations and ensure compliance of health insurance providers with state laws and regulations. Explanation: the New Mexico Insurance Division is the state regulatory body responsible for overseeing the health insurance industry within the state. Its primary function is to ensure that health insurance companies comply with state laws and regulations, protecting consumers and promoting fair business practices. The division does not set premiums for health insurance providers, but may regulate rates to ensure that they are fair and reasonable. Additionally, the division enforces laws related to consumer protections, handles complaints, and ensures that insurance policies meet the state's legal standards. Question 8. Under the Affordable Care Act account, which of the following is a requirement for health insurance coverage to qualifiers? Minimum essential coverage. A. The plan must cover 100% of all healthcare services, including elective procedures. B. The plan must include coverage for preventive care services, such as vaccinations and screenings. C. The plan must only cover catastrophic events with no coverage for routine medical care. D. The plan must provide coverage for all health conditions, including mental health and substance abuse treatment. Answer: B. The plan must include coverage for preventive care services such as vaccinations and screenings. Explanation: under the Affordable Care Act account, Minimum essential coverage (MEC) refers to the level of coverage required to meet the individual mandate. Before it was repealed for most individuals in 2019, MEC must include certain essential health benefits, one of which is coverage for preventive care services such as vaccinations, screenings, and wellness visits at no cost to the insured. MEC is designed to ensure that individuals have access to comprehensive coverage that addresses a broad range of healthcare needs, including preventive services that help prevent more serious and costly health issues. Question 9. Which of the following would be considered a violation of HIPAA? Health Insurance Portability and Accountability Act. A. Sharing patient medical information with the healthcare provider for treatment purposes. B. Disclosing a patient's health records to a family member without written consent. C. Allowing patients access to their own medical records upon request. D. Reporting a patient's health status to a public health agency as required by law. Answer: B. Disclosing a patient's health records to a family member without written consent. Explanation: HIPAA sets strict rules to protect the confidentiality and security of a patient's health information. One of the key provisions of HIPAA is that healthcare providers and insurers cannot disclose a patient's medical records to third parties without the patient's written consent, except in certain circumstances such as for treatment, payment, or healthcare operations. Disclosing health information to a family member without consent would be a violation of HIPAA regulations, as patient privacy must be respected unless a legal exception applies. Question 10. Mr. Rodriguez is a 68-year-old retiree who qualifies for both Medicare and Medicaid. He is seeking guidance on which plan should be considered the primary payer for his medical bills. What should Mr. Rodriguez do? A. Medicare is always the primary payer, regardless of Medicaid eligibility. B. Medicaid is always the primary payer for individuals who are eligible for both Medicare and Medicaid. C. Medicaid and Medicare will share the responsibility of paying medical bills equally. D. Medicare is typically the primary payer, but Medicaid may pay second if certain conditions are met. Answer: D. Medicare is typically the primary payer, but Medicaid may pay second if certain conditions are met. Explanation: for individuals who are eligible for both Medicare and Medicaid, dual eligibles, Medicare is typically considered the primary payer. Medicare pays first for covered services, and Medicaid may cover additional costs, such as copays, coinsurance, and deductibles, depending on the state's Medicaid program. The rules governing the order of payment are designed to ensure that both programs work together to provide the full range of benefits without duplication of coverage. However, the specific coordination of benefits may vary slightly depending on the state and the individual's circumstances. Question 11. Which of the following is an example of a mandated benefit under the Affordable Care Act? A. Coverage for elective cosmetic surgery. B. Coverage for maternity and newborn care. C. Coverage for experimental treatments not approved by the FDA. D. Coverage for outpatient visits to specialists only if referred by a primary care physician. Answer: B. Coverage for maternity and newborn care. Explanation: under the Affordable Care Act, all health insurance plans are required to cover essential health benefits, which include maternity and newborn care, as part of the comprehensive coverage. This ensures that women and families have access to necessary prenatal and postnatal care. The ACAP prohibits insurers from excluding or limiting this coverage. The law also ensures that preventive care, like vaccinations and screenings, is covered without out-of-pocket costs. Question 12. Which type of health insurance plan typically has the highest out-of-pocket costs but provides the most freedom to see specialists without referrals? A. Health Maintenance Organization (HMO). B. Preferred Provider Organization (PPO). C. Point of Service (POS). D. Exclusive Provider Organization (EPO). Answer: B. Preferred Provider Organization (PPO). Explanation: Preferred Provider Organization (PPO) plans offer the most flexibility in terms of seeing any healthcare provider, including specialists, without the need for a referral. However, this flexibility typically comes with higher out-of-pocket costs, including premiums and copays, compared to HMO plans, which require referrals and limit provider networks. PPO plans allow members to see out-of-network providers, but it usually costs more. The flexibility of PPO plans makes them attractive to individuals who prefer a broader choice of providers. Question 13. Which of the following is an example of a covered service under Medicaid? A. Non-prescription sunglasses. B. Routine dental checkups for adults. C. Emergency medical transportation. D. Weight loss surgery without a physician's recommendation. Answer: C. Emergency medical transportation. Explanation: Medicaid covers a wide range of healthcare services with some variation by state. One of the services typically covered under Medicaid is emergency medical transportation, including ambulance services. This ensures that low-income individuals have access to necessary emergency services. Other examples of covered services include hospital visits, maternity care, prescription medications, and some preventive services. Non-essential services like non-prescription sunglasses or weight loss surgery, unless medically necessary, are typically not covered under Medicaid. Question 14. What is the primary difference between a health savings account (HSA) and a flexible spending account (FSA). HSA funds can be used for any type of medical expense, while FSA funds are limited to preventive care only. B. HSA funds are use it or lose it, while FSA funds can be carried over from year to year. C. HSA funds roll over from year to year, while FSA funds typically must be used within the plan year. D. HSA funds are subject to taxation if not used for medical expenses, while FSA funds are not taxed. Answer E. HSA funds roll over from year to year, while FSA funds typically must be used within the plan year. Explanation: the primary difference between the health savings account (HSA) and a flexible spending account (FSA) is how the funds are managed over time. HSA funds roll over from year to year and can accumulate, which allows individuals to build savings for future medical expenses. In contrast, FSA funds are subject to the use it or lose it rule, meaning they must be used within the plan year or they are forfeited, although some FSAs offer a grace period or a limited carryover option. Additionally, HSA contributions are tax deductible and withdrawals for qualified medical expenses are tax-free. Question 15. Which of the following is a common characteristic of high deductible health plans? They generally offer lower monthly premiums, but higher deductibles and out-of-pocket costs. B. They are only available to individuals over 65 years old. C. They do not cover preventive services like vaccinations and screenings. D. They are automatically eligible for health savings accounts (HSAs). Answer A. They generally offer lower monthly premiums, but higher deductibles and out-of-pocket costs. Explanation: high deductible health plans typically feature lower monthly premiums, but require individuals to pay high deductibles and out-of-pocket costs before the plan begins to cover a significant portion of medical expense. TSHE are often impaired with health savings accounts (HSAs) to help individuals save for these higher out-of-pocket costs. Preventive services such as screenings and vaccinations are usually covered without cost sharing under the ENHPs. Question 16. Which of the following is not an essential health benefit that all insurance plans must cover under the Affordable Care Act account? A. Prescription drugs. B. Maternity and newborn care. C. Long-term care services. D. Mental health services. Answer C. Long-term care services. Explanation: under the account, health insurance plans must cover essential health benefits, which include items like prescription drugs, maternity and newborn care, and mental health services. However, long-term care services such as nursing home care or extended custodial care are generally not covered under standard health insurance plans or the ACAS essential health benefits. Long-term care insurance plans specifically cover these services, but they are separate from the standard health insurance coverage. Question 17. Which of the following statements about the Children's Health Insurance Program (CHIP) is true? A. CHIP is available only to children under 12 years of age. B. CHIP is funded solely by the federal government with no state contributions. C. CHIP provides coverage for children in families with incomes too high for Medicaid but too low to afford private health insurance. D. CHIP is a voluntary program, and each state can choose whether to participate. Answer C. CHIP provides coverage for children in families with incomes too high for Medicaid but too low to afford private health insurance. Explanation: the Children's Health Insurance Program (CHIP) provides low-cost health coverage to children in families whose incomes are too high for Medicaid but too low to afford private health insurance. CHIP is a joint federal and state program, with the federal government providing significant funding, but states administering their own programs. CHIP aims to ensure that all children have access to necessary healthcare services, including doctor visits, vaccinations, and hospital care. Question 18. What is the main advantage of a point of service POS plan? A. It allows the policyholder to choose between in-network and out-of-network providers at the time of service. B. It requires policyholders to only use in-network providers and does not cover out-of-network care. C. It offers the lowest out-of-pocket costs but only allows visits to specialists with a referral from a primary care physician. D. It provides comprehensive coverage for both routine and elective care without the need for a primary care physician. Answer A. Allows the policyholder to choose between in-network and out-of-network providers at the time of service. Explanation. A point-of-service POS plan is a type of managed care plan that combines features of both health maintenance organizations (HMOs) and preferred provider organizations (POS). POS plans typically require policyholders to select a primary care physician (PCP) and get referrals for specialist care, but they allow the option to seek care from out-of-network providers if desired. However, out-of-network care typically involves higher out-of-pocket costs than in-network care. The ability to choose providers at the time of service provides more flexibility compared to other types of plans. Question 19. Which of the following is a requirement for a health insurance policy to comply with the Mental Health Parity and Addiction Equity Act (MHPA)? A. Health insurance plans must cover all mental health and substance use disorder treatments at the same level as medical and surgical benefits. B. Health insurance plans must offer mental health coverage without any limitations on treatment. C. Health insurance plans must provide free access to mental health care services at any time. D. Health insurance plans must cover only inpatient mental health care, but not outpatient services. Answer A. Health insurance plans must cover all mental health and substance use disorder treatments at the same level as medical and surgical benefits. Explanation. The Mental Health Parity and Addiction Equity Act (MHPA) requires that health insurance plans provide coverage for mental health and substance use disorder treatments on par with medical and surgical benefits. This means that financial requirements e.g. copayments, deductibles, and treatment limitations e.g. number of visits for mental health services cannot be more restrictive than those for physical health services. The goal is to ensure that individuals with mental health or substance use disorders have access to the same level of care as those with physical health issues. Question 20. What is the purpose of the healthcare marketplace established under the Affordable Care Act to provide a platform for insurance companies to set their own premiums? B. To allow individuals to purchase health insurance directly from the federal government. C. To offer a marketplace where individuals and small businesses can shop for and purchase health insurance plans that meet their care requirements. D. To provide healthcare services directly to individuals who do not have insurance. Answer. C. To offer a marketplace where individuals and small businesses can shop for and purchase health insurance plans that meet their care requirements. Explanation. The healthcare marketplace, also known as the health insurance marketplace, is a platform established under the Affordable Care Act where individuals and small businesses can compare, shop for, and purchase health insurance plans that meet CAT standards. The marketplace is designed to make it easier for individuals to find affordable, quality coverage, and it may offer subsidies or tax credits based on income to help lower costs. The marketplace does not sell insurance directly, but facilitates access to plans offered by private insurers that comply with the CAR regulations. Question 21. Which of the following is true regarding the Health Insurance Portability and Accountability Act? HIPAA. A. HIPAA only applies to health insurance providers. B. HIPAA ensures that health insurance is available to all Americans, regardless of pre-existing conditions. C. HIPAA sets standards for the protection of health information and regulates its privacy and security. D. HIPAA does not cover any health information related to employers or employment records. Answer. C. HIPAA sets standards for the protection of health information and regulates its privacy and security. Explanation. The Health Insurance Portability and Accountability Act (HIPAA) sets standards for the protection of health information, ensuring privacy and security for personal health data. It applies to health insurance companies, healthcare providers, and any organization handling protected health information. (5) HIPAA enforces regulations on how this data is used, shared, and stored. While it does not directly address pre-existing conditions in the way the account does, HIPAA ensures the confidentiality and integrity of health information across various entities. Question 22. Which of the following is an example of preventive care covered by most health insurance policies under the Affordable Care Act? A. Surgery for a pre-existing condition. B. Routine mammograms for women over 40. C. Treatment for a serious injury caused by an accident. D. Elective cosmetic surgery. Answer: B. Routine mammograms for women over 40. Explanation: under the Affordable Care Act, a CAP, preventive care is covered without any out-of-pocket cost to the insured. Routine screenings, including mammograms for women over 40, are examples of preventive care. These services aim to detect conditions early before symptoms arise, improving health outcomes and lowering long-term treatment costs. Procedures like elective cosmetic surgery or treatments for existing injuries or conditions typically do not fall under preventive care. Question 23. In a health maintenance organization, HMO, what is the role of the primary care physician PCP? The PCP is only responsible for prescribing medication. B. The PCP is as the gatekeeper managing all aspects of a patient's healthcare. C. The PCP directly provides all medical care without the involvement of specialists. D. The PCP is an optional physician, and patients can bypass them to see specialists directly. Correct answer: B. The PCP is as the gatekeeper managing all aspects of a patient's healthcare. Explanation: in an HMO plan, the primary care physician PCP serves as the gatekeeper for all healthcare services. This means the PCP is responsible for coordinating a patient's care, including referrals to specialists when necessary. The PCP ensures that the patient receives appropriate care while managing overall health needs. In an HMO, a specialist without a referral from the PCP is generally not covered except in emergencies. Question 24. What is the maximum contribution limit for a health savings account (HSA) for an individual in 2025? A. $3,650. B. $4,050. C. $6,500. D. $7,300. Answer: C. $6,500. Explanation: for 2025, the maximum contribution limit to a health savings account (HSA) for an individual is $6,500. If the individual is 55 or older, they are eligible for a catch-up contribution allowing an additional $1,000, bringing the total to $7,500. The HSA offers tax advantages including tax-deductible contributions, tax-free growth, and tax-free withdrawals when used for qualified medical expenses. Question 25. What type of insurance policy provides coverage for a person's death, disability, and accidental injury typically bundled into one policy? A. Whole life insurance. B. Term life insurance. C. Accidental death and dismemberment (AD) insurance. D. Disability income insurance. Answer: C. Accidental death and dismemberment (AD) insurance. Explanation: accidental death and dismemberment (AD) insurance is a specific type of insurance policy that covers deaths or injuries resulting from accidents. It typically includes the death benefit if the insured dies in an accident, as well as benefits for accidental dismemberment, e.g. the loss of a limb, while whole life and term life insurance provide coverage for death. AD specifically targets accident-related incidents and injuries. Question 26. Which of the following best describes a coinsurance provision in a health insurance policy? A. The insured pays a fixed amount for each medical service received. B. The insured and insurer share the cost of covered medical expenses after the deductible is met. C. The insured pays a percentage of the premium to the insurer. D. The insurer pays the full cost of medical services up to a certain amount. Answer: B. The insured and insurer share the cost of covered medical expenses after the deductible is met. Explanation: coinsurance refers to the shared costs between the insured and the insurer for covered medical expenses after the deductible has been met. For example, if a policy has an 80-20 coinsurance, the insurer pays 80% of the covered medical expenses, while the insured is responsible for the remaining 20%. This is different from a copayment, where the insured pays a fixed amount per service. Question 27. What is the primary difference between a Medicare Advantage plans Part C and a Medicare Supplement plans Medigap? A. Medicare Advantage plans replace original Medicare, while Medigap plans cover additional costs not paid by Medicare. B. Medigap plans replace original Medicare, while Medicare Advantage plans offer broader coverage. C. Medicare Advantage plans provide drug coverage, while Medigap plans do not. D. Medigap plans are government funded, while Medicare Advantage plans are privately funded. Answer: A. Medicare Advantage plans replace original Medicare, while Medigap plans cover additional costs not paid by Medicare. Explanation: Medicare Advantage plans Part C are offered by private insurance companies and provide an alternative to original Medicare Part and Part B. These plans often offer additional benefits such as prescription drug coverage, dental, and vision. Medicare supplement plans Medigap, on the other hand, work alongside original Medicare to help cover the out-of-pocket costs like deductibles, coinsurance, and copayments that original Medicare does not cover. Question 20. Which of the following statements about long-term care insurance is true? A. It covers most medical expenses, including hospital stays. B. It typically provides coverage for extended nursing home stays, home health care, and assisted living. C. It is designed to replace income if an individual becomes disabled. D. It covers the cost of elective medical procedures and cosmetic surgery. Answer: B. It typically provides coverage for extended nursing home stays, home health care, and assisted living. Explanation: Long-term care insurance is designed to help cover the costs of care that are not covered by standard health insurance, including nursing home stays, home health care, and assisted living services. It is particularly helpful for individuals who need assistance with daily activities due to chronic illness, injury, or aging. Long-term care insurance does not typically cover medical expenses like hospital stays or elective procedures. Question 29. What is the primary goal of the Affordable Care Act, ACA, individual mandate? A. To increase the number of individuals purchasing government-sponsored health insurance. B. To ensure that all individuals have access to government-run healthcare plan. C. To encourage individuals to obtain health insurance coverage or face tax penalty. D. To eliminate insurance premiums for low-income individuals. Answer: C. To encourage individuals to obtain health insurance coverage or face a tax penalty. Explanation: The primary goal of the individual mandate under the Affordable Care Act (ACA) was to encourage individuals to obtain health insurance coverage by requiring most people to purchase health insurance or face a tax penalty. The mandate aimed to ensure a large and diverse pool of enrollees in the health insurance market, which would help reduce premiums by spreading the risk across healthier and sicker individuals. The individual mandate penalty was effectively reduced to $0 in 2019 for most states, but some states still enforce their own mandates. Question 30. Which of the following best describes a universal life insurance policy? A. A whole life policy with a fixed premium and death benefit. B. A flexible life insurance policy that allows changes to the death benefit and premiums. C. A temporary life insurance policy with low premiums. D. A term life policy that covers the insured for a specific number of years. Answer: B. A flexible life insurance policy that allows changes to the death benefit and premiums. Explanation: The universal life insurance policy is a type of permanent life insurance that offers flexibility in terms of premiums and death benefits. Policyholders could adjust the death benefit and premium payments, making it more adaptable to changing financial needs. Unlike whole life insurance, which has fixed premiums and death benefits, universal life allows the policyholder to alter the coverage and contributions based on their circumstances.